The real estate crash is here. The problem is, it's not exactly what you think it is. You see, since about 2011, the average American has been waiting for the next crash to buy back into real estate. Now, part of the problem is that home building has been crashing during this entire time. And when it comes to real estate, the only statistic that matters is the number of people who want a place to live versus the places that there are to live. We're going to look at a few pieces of data to show that the real estate crash is happening in home building, not home prices. Let's take a look. This article is from the Mises Institute, and it shows the housing boom in construction is already over, so the housing shortage will continue, meaning we've had a housing shortage for a long time now. And while we had a short amount of reprieve, or what we thought would lead to some reprieve, it looks like that's not actually going to take place long term. This is a fantastic article here. I sent it out in my weekly newsletter. If you want to subscribe to that, link is below. And we're going to go over some of the statistics that Ryan talks about in this article. But real quick before we do, I have to say that I have been warning about our nation becoming a nation of renters and landlords for a long time, that the real housing crisis is all of the people who've been waiting to get into the real estate game, doing the Dave Ramsey thing, trying to save up a bunch of cash to be able to purchase it with 20-30% down, and are being left on the sidelines. And we are seeing that in real time right now as rates have been increasing and prices haven't collapsed yet. If they were going to collapse, this is the time that they would start collapsing, when volume is down, sales are down, and mortgage rates are up. But prices are still high, and we're going to see why. And if you'd like to make sure you're not underexposed or overexposed to real estate over your entire investment portfolio, get my portfolio allocation mastery course linked in the description below so that you know exactly how much to allocate to every single asset class so that you are robust and resistant to and anti-fragile to crashes. First, we're seeing U.S. housing starts tumbling in October during the soaring mortgage rates. A huge drop in single-family housing starts. This is the biggest share of home building, down 6.1% to a rate of just 155,000 units, and this is the lowest since May of 2020. This has led the measurement of affordability for buying homes to reach a low that it hasn't been for decades, which obviously this makes sense. When interest rates go up, that means on the same size of mortgage, the payments are going to be much higher. And you would expect then as interest rates go up that prices would have to go down to compensate, but they haven't. And so both prices are still higher and rates are drastically up, meaning that if somebody wants to sell their current home, if they bought it any time within the last 10 years, and move into an equally priced home, their payment will be up 50, 60, 70, 80%, depending on what their mortgage rate is right now, because the new rates are so much higher, prices haven't fallen yet. As a result of affordability being in the toilet, we are seeing demand for mortgages flatlining. Not a good time to be in the mortgage business, with refinancing demand especially taking a huge hit, down 87% from just 1 year ago. It's now at a 22-year low. Why is that? Because everybody and their mother refinanced during the last 2 years when mortgage rates were at basically all-time lows. Why wouldn't you? It's free money. And even mortgage demand to purchase a home is down 41% from a year ago. That's almost a 7-year low. Now, I've talked before about how fixed rate mortgages are like shorting the dollar because it allows you to borrow something and then exchange it for an asset. That's what shorting is. So when you short a stock, you borrow the shares, you exchange it for dollars, then you have to buy back those shares and deliver them back to who you borrowed them from in order to close out the trade. When you buy a home with a mortgage, you're doing the exact same thing, shorting the dollar. You're borrowing dollars and exchanging them for a house. And then to pay back those dollars, many times you have to sell that house then to get the dollars back to pay those dollars back. And shorting the dollar is a great way to take advantage of inflation, of the value of those dollars decreasing over time, but not if it's an adjustable rate mortgage. And this is concerning here, this trend. Adjustable rate mortgages increase to 12% of all applications. Adjustable rate mortgages are attractive because they offer those lower interest rates up front, but they are very dangerous because they are adjustable. So if inflation keeps on going, the lenders are going to win here because they're going to be able to adjust those rates upwards. You'll have no choice but to pay them. them, or of course default. Either way though, what we're seeing here is a trend where nobody's buying houses right now. And guess what? The majority of Americans, more than 50%, are homeowners. So if most people aren't buying homes, that also means most people aren't selling them either. But we have to take a look at the broader picture over a broader timeline, and that's where construction comes in. Total number of places to live versus people who need a place to live. And while we know that single-family housing starts are at their lowest level since May of 2020, multifamily construction is already taking a hit as well. And with fewer multifamily homes being built, that means renters are locked into place with fewer options to go rent somewhere cheaper, and most of those renters can't afford to go buy a home. In fact, the number of renters who can buy a home at the average national price is down 15% from just a year ago. How many of these renters who can no longer afford to buy a home because prices went up, and guess what? They're stuck renting, and they're going to be stuck paying higher rent prices because more multifamily homes are not being built now, so they don't have as many options to choose from. How many of these people who are now stuck being renters could have bought a year ago, could have bought 2 years ago, 5 years ago, and chose not to because they listened to people who said the crash was coming, the people who ignored the demographics of population versus construction? The reason why multifamily construction is taking a hit is because while interest rate hikes are hurting home buyers, they are also hurting developers. This has led to a condition in the United States where we have a massive housing shortage. Now, all of this could be fixed if we had more homes being built. No, we don't need more affordable homes being built. We need more homes to be built. If the supply increases, all else being equal, the price will go down. But that's not what's happening. In fact, year over year, we are seeing negative swings in housing construction. During the years 2006 through 2009, we had a massive drop in construction here, hitting a 38% drop in 2009. It wasn't until 2020 when new housing construction returned to the post-1990 average. If you take a look at this chart, this shows the number of new US residents per new housing start. What this chart is showing is an increasing number of people who need a place to live compared to the places that there are to live. This is a bad sign for housing affordability. As it goes up, that's more of a housing shortage. Now, obviously, there was a big drop in this chart leading into 2020 because new housing construction reached its highest levels seen since 2007 during 2020 and 2021. At the same time, there was a decline in population growth because of border closures and a fall in the birth rate. But this trend is going to reverse because, like we're seeing right now, construction is grinding to a halt. Further than that, it looks like population growth is also returning to the normal rates, which means that the boom in number of places to live versus the number of people that need a place to live that lasted about 18 months will not be enough to compensate for the last 10 years, nor will it continue long enough to be sufficient for the future. This does not bode well for anybody who has been sitting on the sidelines, storing up cash, renting, paying higher and higher rents every single year, waiting for the next real estate crash it looks like may never come. Now, certainly one thing that could reverse this trend and cause a huge wave of selling would be a massive wave of unemployment where everybody loses their jobs and cannot pay their mortgages anymore, so they lose their homes. But we still have to face the problem of the number of places there are to live versus the people who need a place to live. And all those people, if they do lose their jobs and have to walk away from their homes, they still have to live somewhere, which means that they're going to be renting from someone, which means that all those homes that go up for sale will be bought by somebody and will then be renting out to those people who just lost their homes. If we had an imbalance the other way, you would probably see right now rents being extremely cheap relative to mortgages. But that's not what's happening because we have a housing shortage, whether it's for renting or for owning. We are on the road to serfdom, and within probably just a few years, the house prices in this country will be at a place where if you don't already own a home, you'll likely never be able to break into that market for most people. I don't know you or your personal situation, but what I am telling my friends and my family is get in while you can. At least get your foot in the door because you have to live somewhere. So you're either going to be paying higher and higher rents every single year for the rest of your life, or worst case scenario, you'll buy a house with a mortgage that's expensive and you'll have to wait out a crash. Worst case scenario. I guess worst case would be you lose your job and you lose the house and you're back to renting anyway, which is what you're choosing to do right now. So at least get your foot in the door, because if I'm right, that means that we don't have a crash ahead of us. Prices continue to go up. You at least get your foot in the door so you're not left out of the game forever. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.